Well, crucial economic data was released today. Industrial output picked up more than expected in May at 2.4% on a year-on-year basis, a bit higher than expected. That number, however, still fairly low. Diana is going to take us through all of the data that came in today. Diana?
Well, finally, some positive news on the economy front. Industrial output picked up more than expected in the month of May. Industrial output grew by 2.4% for May, a bit higher than what analysts were estimating, but it remains soft overall. If you take the 3-month moving average basis, industrial production, in fact, weakened, declining 0.6%, much worse than the 5 to 6% growth that we saw in the first half of last year. Now, significantly, if you look at the April number, it got revised downward to show a decline of 0.9% versus a growth of 0.1%, what they had shown earlier. Now, in terms of a sector contribution, mining continues to show weakness, while electricity, of course, remains somewhat resilient. The contribution to industrial production remains biased towards the consumption-oriented sectors, which seem to be doing well, while the consumer goods sector grew at 3% on a 3-month moving average. Capital goods has, in fact, averaged a sharp decline of nearly 16% in the last 3 months. Intermediate goods, on the other hand, has been falling for the last 8 consecutive months in the last 10 months. However, if you look at it this time around, it rose by 2.7%, but we'll have to see whether there is a definite sign of some amount of turnaround. Now, monsoon, we'll have to see how that really progresses. And June inflation print, that will, of course, be most important for the Reserve Bank to take their policy decision. Inflation numbers will be out by next week. We'll, of course, get you those. And at the same time, of course, the Reserve Bank of India will watch out for industrial production as well as inflation to decide on their rate decision.
So that was, of course, an important factor we were tracking today. Deputy Chairman of the Planning Commission, Montek Singh Ahluwalia, said while there was an improvement in IIP growth, it doesn't quite point to robust recovery.
Well, look, I'm not making a prediction. I've been told about the numbers. I think it's a 2.1% growth, which is quite low, although it's better than the previous year. Whether this will be exactly reflected in the GDP numbers, you cannot say, because, you know, the GDP numbers rely on a lot of other information. But obviously the fact that there is an improvement is a good thing, but I don't think it's an improvement that suggests as yet any kind of robust recovery.
Well, let me welcome in our guest tonight to make sense of these numbers. Venugopal Dhoot of Videocon and DK Joshi, Chief Economist with ratings agency Crisil. Gentlemen, thanks so much for joining us. Mr. Dhoot, the numbers this time around positively surprised, but are they really indicative, as we just heard from Mr. Ahluwalia as well, of a revival in growth?
You see, in May, we were expecting that April was down, so May will maybe go down, but at least we got some 2% improvement overall. So it's a happy news for the government and for Dr. Manmohan Singh that economy is moving positive way. Only one thing is disturbing, that capital goods has declined by 7-8%. So that's not the good news. But while research I do, and I found that capital goods, domestic manufacturing has been declining, but imported capital goods are coming, especially for infrastructure sector. So in totality, capital good expenditure, people are doing and capital formation is taking place. But yes, domestic capital good industry should be and must be encouraged. And that I think South Block, North Block will take the position on that.
Right. Mr. Joshi, you know, IIP surprised on the positive side as we were just talking about. What do you make of this number going forward, particularly in the light of the fact that the previous month was once again revised downwards?
Well, I would say that I think one shouldn't read too much into it, except that I think it's for a change, it's in line with the market expectations. And I think one should also remember that it still remains very weak. I mean, we have merely 2.4% growth in industrial production, which is way below our long-term trend. So I think weakness in IIP continues. Capital goods are not doing well at all, and that's reflective of the weak investment climate. There is some pickup in consumer durables, and I don't think that's going to last at these levels for long. And there are risks from monsoons as well for the FMCG sector, which is not doing well. So I think one needs to take this number cautiously, and also because I think these numbers have been subject to quite serious revisions in the past.
Right. You know, if we also take a closer look, Dr. Joshi, the the investment environment has been sluggish, but what's your outlook going ahead? Do you expect to pick up anytime soon, especially for the year as a whole, also in terms of growth?
Well, I think we believe that overall industrial production will settle at around 5%. I think, and main reason for that is the weak base of last year. And what we factor in while projecting this is that there will be some positive moves from the government, particularly in the mining sector, which will prop up the mining activity, which contracted last year. And also, I think we believe that that will spill over to the manufacturing sector. And if coal issues are sorted out, that would be positive for the power sector. So I think taken together, I think we might end up with 5% industrial growth this year, which again is subpar. And I think given the weak base of last year, it's not satisfactory at all.
Mr. Dhoot, what would you like to see from the government in terms of stimulating growth? There's been a lot of talk. Would you like to see more action on the ground?
Many signals are to come from the government. One thing is that they should mandate Reserve Bank of India to reduce out the interest rates somehow. At least for infrastructure sector, interest rates are very high. You see, you always tell that you are linked with global economy. Global interest rates are 2 to 3%, whereas here in infrastructure sector also you have to pay interest of 12 to 14%. So that has to be rectified somehow, and then you will see the changes.
Now, sequentially, Mr. Joshi, if I can come back to you, as you mentioned, there's been some amount of pickup with inflation continuing to remain above 7%. So what action can one expect from the RBI in that case? Will they be pushed to act, fearing that things could get worse?
Well, I think if I go by their last policy statement, I think doesn't look like they'll cut rates this time. I think they will be on hold, and I think they'll wait for some action from the government, particularly in terms of fuel price increase. I think which will push inflation in the short run, but will definitely tame inflation expectations going ahead, and will be a good signal for the fiscal situation. So my sense is I think they'll hold on, because there are too many risks to inflation. Even though the growth is going down, I think they would still like to be cautious on the inflation front, which has been a big problem for the last couple of years, not just right now.
Now, say the RBI maintains interest rates high to keep a check on inflation. What then will happen to corporate India, which is already reeling under the pressure of a slowdown? We've already seen Q1 numbers starting to trickle in. Infosys today indicating a really cautious outlook.
Well, there seems to be a lot of seriousness, I think, from the announcements that are coming from the government, and I think the moves appear to be positive. But I think my sense is that at least we'll see some. We can't expect all the reforms to be pushed ahead, but at least few things we'll see happening. And I think what might help at this juncture is at least speeding up the project clearances, etc. I think if government pushes that, I think that will yield a positive dividend. And also I think what will yield a positive dividend is making coal available to the power sector, because I think the new capacity that came up in the last year or so, I think is operating at sub-par level. I mean, the PLFs are very low. So I think, and that's primarily because the coal is not available, and because power generation is weak, people are moving towards dieselization. I mean, so they are using diesel as a substitute. So I think the point I'm trying to make is that I think sorting out some of these smaller issues which have become big, I mean, like making coal available and also speedy clearances of some of the key projects, I think that will provide some upside to the depressed growth environment. I think that's what government needs to do right now, and follow it up with reforms, I think, whatever is feasible.
Mr. Dhoot, are you still hopeful of a rate cut from the RBI given the numbers today and also given the consistently high inflation that we've been seeing?
You see, in last 10 days, I met Prime Minister 2 times, then Dr. Mantoh Singh Ahluwalia, Rangarajan, and also the Governor Subbarao. And I see from the body language, they are also feeling that interest rates are very high. So this time I feel at least 1% they will reduce. Immediately, if they look at their papers, all their calculations and formula, it doesn't fit, because governor always feels that inflation is high, so interest rate should not be reduced, and inflation is not coming into control. But two other things are also not in control, that is fiscal deficit and current account deficit. So looking at all these things, there is no case on paper for reduction of interest. But when people demand is there, public demand is there, and industry wants it and has been crying since last 6 months, so I think they will listen to that and some interest rate reduction will be there.
So overall, if we had to wrap this up, Mr. Joshi, final comments from you. What is the key signal coming in, going ahead? Are we going to see more action required on the ground? Are we going to see that uptick in growth anytime soon?
Well, there seems to be a lot of seriousness, I think, from the announcements that are coming from the government. And I think the moves appear to be positive. But I think my sense is that at least we'll see some, we can't expect all the reforms to be pushed ahead, but at least few things we'll see happening. And some of, I think, what might help at this juncture is at least speeding up the project clearances, etc. I think if government pushes that, I think that will yield a positive dividend. And also, I think what will yield a positive dividend is making coal available to the power sector, because I think the new capacity that came up in the last year or so, I think is operating at sub-par level. I mean, the PLFs are very low. So I think, and that's primarily because the coal is not available, and because power generation is weak, people are moving towards dieselization. I mean, so they are using diesel as a substitute. So I think the point I'm trying to make is that I think sorting out some of these smaller issues which have become big, I mean, like making coal available and also speedy clearances of some of the key projects, I think that will provide some upside to the depressed growth environment. I think that's what government needs to do right now, and follow it up with reforms, I think, whatever is feasible.
All right, gentlemen, thank you so much for joining us on the show tonight. Great to get a perspective from you on the way forward. It definitely looks like there are still tough times ahead, and especially, of course, we'll have to wait and see how the monsoons continue to pan out before that RBI meet towards the end of the month. In other news, the 2G spectrum